Hello, welcome to the midweek trading day right here in Lagos, Nigeria. Let's head straight to the markets now to see how they're looking. Starting with oil, we see oil prices have surged today as supply tightens from Russia and OPEC members, while stronger than expected U.S. job openings. That hinted at growing economic activity and rising demand for crude. I guess investors want to know if there's going to be demand for crude in 2025, but we're seeing that impact the price there, 0.42%, $77.37 a barrel. Seems these prices might be tending towards that $80 level. We'll see if we can get there at some point. U.S. WTI crude, $74.67 a barrel, that's up 0.57%. We see a Reuters survey revealed that OPEC's oil output dropped in December, reversing a two-month upward trend as maintenance in the UAE that offset gains elsewhere. Meanwhile, Russian oil production fell short of targets, averaging about 8.9 million barrels per day in December. And according to Bloomberg, on the economic front, job openings in the U.S. rose in November with low layoffs and workers hesitant to quit, signaling a healthy economy and increased oil demand. We'll see if that continues to play out in 2025. To the FX market now, we see the NAFEX window saw a notable jump, about 3.70 naira to settle at 1,538 naira. So we see NFM 0.29% down, 0.07%. That was the marginal drop there for the CBN rate, 1,534 naira to the dollar. NAFEX 1,538, 0.24% jump there. So we're still seeing that range trade there for the naira in the FX market. To other matters now, see Nigeria's foreign exchange reserves that rose by $591 million in the month. Following the government's $2.2 billion Eurobond auction on December 2nd, 2024, the reserves increased from $40.29 billion on December 2nd to $40.8 billion by January 3rd, 2025, reflecting a 1.47% month-on-month growth. The central bank's data also reveals consistent growth, with reserves climbing steadily throughout December. The highlights include an $84 million rise in the first week and a sharp $265 million jump mid-month, driven by foreign exchange inflows and oil revenue. Compared to the previous year, Nigeria's reserves have grown significantly, surging from $33.042 billion in January 2024 to $40.88 billion in January 2025. And to other matters, the Pension Fund Operators Association of Nigeria, PENOP, has raised concern over the sharp decline in pension fund investment, as in real estate investment trusts, that's REITs. According to PENOP, REIT investments have plummeted from 239 billion naira in 2020 to just about 20 billion naira by the end of 2024. This significant drop, with a low point of 14.14 billion naira in 2022, highlights the challenges facing the sector. REITs, which allows investors to pool funds for income-generating properties, are traded on the Nigerian exchange like stocks, and we see that's impacting how these pension funds invest in that market. And to infrastructure matters now, see the China Development Bank has approved a loan of $254 million to support the development of the Kano-Kaduna Railway project in Nigeria. The crucial funding aims to keep 203-kilometer standard gauge railway project on track, ensuring its timely progress without delays, connecting Kano, a key commercial hub in northern Nigeria, to Abuja, the nation's capital. The railway will offer a safer, faster, and more efficient transportation option, enhancing regional connectivity. Beyond improving mobility, the railway is expected to boost economic activity along its route, create jobs, and spur growth in related industries as a key project under China's Belt and Road Initiative. It's being carried out by the China Civil Engineering Construction Corporation with financing from the CDB. Construction is already moving forward smoothly, with the bank reiterating its commitment to supporting the Nigerian government throughout the project's development. And now to our first conversation. We see the Nigerian finance sector is facing some significant talent retention challenges with economic instability, migration, dissatisfaction with compensation packages being a major concern. A recent report by Duplo, a provider of technology solutions for African businesses, highlights the need for inflation-adjusted compensation packages. And joining us to discuss that, we have Yele Yekola as the CEO and co-founder of Duplo to discuss the findings in the report. It's great to have you.
Thank you so much.
Yeah, so quite interesting. Happy New Year, first of all.
Yeah.
And so we're seeing dissatisfaction.
Makes sense.
When it comes to compensation, definitely it's expected. Inflation, currency devaluation, some people's salaries at some point could fetch them maybe $1,000.
Yeah.
That's not the case anymore. And looking at the report, we're seeing compensation satisfaction. People dissatisfied with their current compensation was about 27% in 2024.
Yeah.
Moderately dissatisfied with current compensation, 29%. Speak to me about this data and how it compares to the previous times.
Yeah, so I think, like you said, it's expected. One thing that we saw in the report was that more than half of the guys that we surveyed earn less than 500K in finance teams in Nigeria. That 500K last year could have meant almost $1,000, like you said. Now it's
at some point over $1,000 go back.
Exactly.
Yeah.
So now it's halved, significantly. So it makes sense that we've seen, a significant jump from 14% to about 3% in terms of people being happy with their pay. If you add this together, it's about 56% of people actually not happy at all with their pay. And that has been a massive decline from last year. And it's also very difficult for businesses to adjust to this because they are also facing these issues as well. Inflation is very high, and it's very difficult for businesses to pass this cost to their customers as well. So it's like a case of businesses can't pay because they're not earning as much, and employees aren't happy at all. And how they're solving for this is by just leaving the country and looking for other jobs that could pay better.
I guess it's just like, the birds.
Yeah, exactly.
You watch an animal documentary.
Exactly.
You see the birds, they migrate to different regions.
Yeah.
Maybe there's some kind of drought coming in this region, so they go and look for
other opportunities.
So that's what's happening.
That's what's happening. So even in this survey as well, 22% of the people that we surveyed were already outside the country. So it's not looking very good for the finance industry. And just to give context as well, this was just heavily focused on finance teams.
Right.
So I'm sure it's even worse in other, jobs as well. It's not looking very good. And the hope is that, we can...
And I guess that's also encouraging that the Japa syndrome...
Yes.
Did it kind of calm down somehow in 2024?
So it wasn't as...
Same?
Yeah. So 2023, when we did the survey, we actually asked people if they were actually looking to leave. And it wasn't as high as this year's, last 2024, I mean. And, but then the issue as well is that because cost of living is expensive, also very difficult for folks to actually find ways to leave the country because now it's more expensive to actually get flights and, afford visas and all these different things. So people are kind of stuck in their jobs. And that's what led to, us, telling businesses to actually find ways to adjust for inflation. But like I said, it's easier said than done.
Because we see the businesses too
also struggling.
At this point, the revenue is not coming as they would like.
Yep.
Profits are dwindling. We're seeing industries like the telecom industry asking for tariff increase.
Yeah.
At this time, even though we're wondering how much the consumer, can take. So it seems it's no one's winning at this point.
No one's winning. But just back to your point about Japa as well. What we're seeing this year is that, for me as a tech provider, what would happen is we focus heavily on finance teams. And every single month, we were pitching to businesses and we're pitching to a new CFO every single month because they're just being replaced. People are just leaving. And just turnover is just, rapid in the industry, or across different industries. And yes, mostly to Japa.
So what can an organization do, at this point?
I think, it's in two buckets. So one is the Japa issue, and the other one is the economic issue. On the Japa issue, I think it's almost impossible to solve for that. I think the best a business can do is just provide great working conditions for your employees, make them feel they're actually a part of the business itself, and that could lead to loyalty as well. So that might not stop the Japa issue, but it might just delay it significantly. And secondly is, economic, just tying compensation to inflation as well. So one thing we're seeing businesses do more and more is they kind of increase the base salary, but they're also improving their benefits. So now we're seeing things like grocery allowances, transport stipend, housing stipend as well. So those things can actually help businesses keep their employees better. But Japa is a different beast on its own. It's a personal issue. We're also seeing a lot of people who also wanted to, move abroad for their kids as well. How do you stop that? It's almost impossible. But yes, the best you can do is just provide a great place for your.
So even though you're not increasing the salary, you can create benefits.
Yeah, that could be the easiest way for businesses to solve for these issues.
Is it affordable-ish?
I think it's less, it's cheaper than doing a complete
full-on 200% increase.
Yeah, so it's for us at Diplo, for example, we've done inflation-adjusted salaries over the last 3 years. And it's also sustainable for a lot of businesses in Nigeria. We are very lucky that we can do that. Most businesses can't do that. And that's, like I said, that's what's leading to these issues that we're seeing in the data.
Right. And, going back to 2024, we did see some stability for FX. We saw the Naira. It was towards the middle, towards the end.
And then it came back.
Then, when all the just got back, came in and we saw some inflows. So did that impact at all?
We didn't see that in the data. We didn't get that information in data.
Okay.
I think what we saw though is, yes, more people want to leave, more people are trying to leave, but now it's just much difficult for them to leave. And it makes sense because, like I said, we've seen the FX.
Because we also heard about Jackpada.
What's that?
People that left
and they came back.
Have come back.
That's a luxury, That's a luxury. I think that also happens, in the higher, bands of these different, so CFOs, auditors. That happens, but mid-tier, employees, no. I think a lot of people are just trying to go find better opportunities elsewhere and maybe come back when they're, at a certain level. All
right, so let's look at the talent retention challenges there. We see economic instability, about 41.4% of respondents cited that as a significant threat.
Yeah.
Yes, it was talked about the migration, 34.5% cited as a significant threat, also migration. Then the exchange rate fluctuation.
Yeah.
So we did see stability at some point. But inflation, we saw moderation, but it started picking back up.
Yep.
So, looking at 2025, it almost seems like we might be coming into 2025 with stability.
I hope so.
That's with the Naira.
Yeah.
We're all hoping that, continues. But inflation, that seems to be the wild card at this point. So what do you think can be done to create some kind of satisfaction for employees in 2025? That's not going to cost the business too much.
I think it's very difficult for a business to pass on costs to their customers. So yes, revenue is going to be stagnant, unfortunately. One thing we're seeing now is that we're seeing a lot of businesses trying to use technology to basically solve some of their issues and be a bit more agile and efficient, so they don't have to hire more people. So now if you can retain your talent and just have your employees, the same numbers, year on year, and revenues may be increasing a little bit, you can actually increase salaries there. So one thing, of course, you're trying to just be a bit more efficient with your business, so you can actually pass on the savings to your benefit package for your employees. So I think that would be the first thing that businesses should do. And then secondly is, like I said, they're getting benefits. I think the most important thing that a business could have is the talent, right? They drive the business. So investing in that long term and thinking of it as like an investment could be a way for businesses to win over the next 4 or 5 years when we see that things might become a bit more stable. So, it could be like you're actually investing in these people to potentially stay over the next 3, 4, 5 years. Because another thing we're seeing is that even if they leave, for Japa or whatever reason, hiring new people and training them as well is just as expensive. So why don't you pass on those savings to just increasing the salaries or benefits to get them keep them longer? Thirdly is just making employees feel that they're part of the business. So a lot of startups like ours, provide equity packages to employees as well. It's not as expensive in the short term, but the hope is that as the business grows, they also make money as well. So yes, that's something that businesses can do, and that's something we do as a business, and that's helped significantly keeping our talents at bay.
So what about the talents themselves? What should they be doing?
Upskilling.
You did mention upskilling in the report.
Yeah, I think upskilling. So the finance teams tend to be very traditional, and it makes sense. They don't earn money. But it's very important that, with this wave of technology, AI, data, they just need to upskill, or else, they'll lose their jobs to technology, unfortunately. So yeah, upskilling is very important. We're seeing that a lot of employees actually want to be upskilled, but the businesses aren't helping them do that. I think about 71% showed that over the last 5 years they've done some trainings, but that's dwindled significantly over the last 1 year because of this cost of living issues. So yeah, upskilling is very important. Secondly is just bringing your best self to work. Right now, a lot of employees are looking for ways to fire people. Any reason to fire people, unfortunately. So just being very important to your business. And that, like I said, upskilling will probably be the most important thing that employees can do.
So I guess you have to be fireproof.
Almost, yeah. The business can
let go proof.
Yeah, exactly.
All right, what advice do you have for CFOs? At this point, they handle all the money.
Yeah, I think just very worth for your money. Things won't get better. Unfortunately, I think things might be a bit more stable this year. But how do you earn more revenue to help the business grow? But in regards to this topic, I think just becoming a partner to the business. Helping the business think long term, and also becoming also a partner to the HR team as well. What strategies can you use to basically keep your talents at bay or keep your talents still within the business? And like I said, thinking of your employees as an investment.
Are there any success stories you can talk to me about?
Not a lot. I think, like I said, when I speak to businesses about Duplo, I'm seeing that every single month there's a new CFO in the team, it's a new finance manager in the team, and the reason is because people are leaving. So I would say it's more bad stories than success stories across the industry, really.
And from all the data you've seen in 2024, what's that pointing towards 2025? What's the crystal ball saying? I
think it's probably going to be the same. So it's like 2023 we saw a massive jump from 14% of people actually being incredibly satisfied with their pay to 3%. The hope is that increases this year as the economy becomes more stable, but it doesn't really look like it. Like I said, inflation is going to continue to rise. FX might be a bit more stable. So I think with this data, it's just showing that 2025 would be the same trend that we saw in 2024.
Right. All right. I guess at some point, everybody gets satisfied.
I hope so.
Employers to employees.
I hope so.
And everyone in the value chain. Thank you so much. It was great having you for this conversation.
Thank you very much.
Aziele Amoyekola is the CEO and co-founder of Duplo.
Thank you.
Thank you. All right, so we'll take a break now. When we come back, it's all about investors at this point. What to expect in 2025? What should they be looking at? That's our next conversation. Just stay with us. All right, so we see January is moving along really fast. At this point, we're expecting inflation numbers sometime next week. But let's review what's played out so far for the month of January in the market. Join us for this is Dr. Ayodeji Ebo, the MD, Optimus by AfriInvest. Great to have you on the show. Happy New Year.
Yeah, good morning. Happy New Year to you. It's great to be here.
Right. So we see yesterday the market, they closed in the red, but, month to date, January is still looking quite green, at this point. But the week is looking like it might end negative, with the way things are going. What are you expecting for investor sentiment in January? Are you expecting it to just be flat?
Okay, thanks. Like you mentioned, it opened on a very interesting note. And if you look at by sector, some of the top sectors that have been generating a lot of interest, the insurance sector, the ICT sector, and the services sector, well, most of those stocks have gained double digits growth just this year alone. And what we are seeing is that investors are also trying to position ahead of full year results. So high-level analysis is being carried out. You look at the 9-month result of most of the companies, and you see it's been very impressive. It's most likely that the full year will also come in positive. So we've been seeing a lot of that engagement and positioning by investors. So we feel that the month of January will still close positive, albeit may not be as aggressive as we saw last year. But there are some sectors that may also distinguish themselves. Some of these sectors, look at the insurance sector, and in anticipation of the policy around the recapitalization, is also what is driving sentiment within that space. The telecommunication sector, which is also premised on which is also going to be premised on the approval of the upward review of the tariff. So we're seeing investors trying to position in some of those companies ahead of those approvals.
But talking about the approvals for the telecom sector, if it doesn't come in the first quarter, what do you think happens to most of these telecom stocks?
Yeah, so I think that there are two factors that are driving beyond the expectation of the upward review. Secondly, if you check their results last year, the FX volatility really impacted on their earnings. So we expect that with less volatility of the FX this year, so by the time they do their mark-to-market on the FX, there will be less FX losses compared to last year, which will make them profitable. So those are beyond that first factor I mentioned. This other factor is also a major determinant. So we still feel that with the discount at which the stocks traded last year or is currently is trading, there's still upside opportunities. So this is not a recommendation, but we think that we like the sector.
All right, so, we've been talking about beating inflation for the longest time now. We did see the all-share index may outperform inflation in 2024. Do you see that happening in 2025? And what do you think is that asset class that investors should really, pile money into in 2025 to really, really beat inflation?
Okay, thanks. So I think the first thing we need to notice that while you're also trying to beat inflation, you can also be sure that you're also bridging the gap. So no idle funds. Secondly, we look at the sector. The equities market will still beat inflation. So overall, may not, but there are stocks that have potential. So if you're able to identify some of the sectors that either policy will drive them or there's demand for the products that they offer, those stocks will still beat inflation. Secondly, investment in dollar-denominated assets. So while we expect a mild depreciation, not as we saw last year, of the naira, we feel that when you look at likes of the U.S., those that invest in the U.S. stock market, Donald Trump, based on his policy of American first, most of the companies within that space, there will be a lot of support for them, and there will be capital appreciation in those stocks. For those that are risk averse, can also look at cryptocurrency. You need to understand the risk that you are going into if you want to go into that. And we also think real estate is also a sector that, especially if you are within the low, medium housing space, there will still be, the demand is still there. And if you take advantage of the area where you invest, will also determine the return that you also get. So there are a couple of assets that we think would also beat inflation. But overall, like for those that don't like to take risk, this area, we see fixed income investments is also very attractive, but we don't expect it to close this eye. So to take advantage of that, you invest in more long-dated instruments such that when interest rate is reviewed downwards, it doesn't affect you. So you take advantage of that. So those are some of the ideas that investors can take advantage to optimize. So you are talking about a portfolio. So when you have different return across asset classes, overall, you should still be able to beat inflation.
Talking about most of the risk assets, at this point, they really did well, in 2024. Do you think risk is still going to be a risk-on sentiment in 2025?
Yes, I believe that, yes, it will be. Within that space, regulation is also coming in and adoption is increasing. So which means that demand will also increase because the issue, the liquidity, especially the top or the traditional cryptocurrency, when you look at the availability, the units is not as readily available, that which means it will drive the price. So as more global asset management, even if it's 1% of their AUM that they put in this sector, it drives it. We saw what happened when BlackRock, one of the leading asset managers in the world, invested in last time investing in cryptocurrency. And some of the likes of also JP Morgan for their private wealth clients, that is also going to drive sentiment. But what it concerns for a lot of people is the regulations. And I feel that once the proper regulations is put around that particular asset class, they would also see more adoption in that space, which would drive up the price.
All right, we'll definitely keep watching out for that, but I'm sure investors are also watching out for the central bankers. What is central bankers going to do with rates in 2025? We already heard from the U.S. Fed. The Central Bank of Nigeria, the MPC, they are not we're not really seeing them talk about rate cuts, that much, coming into 2025. But it seems that might be in the cards at some point. So what are you seeing for the first meeting in 2025? That's for the MPC. And what kind of forward guidance are you expecting?
Okay, thanks. I think at this meeting, it's likely that rates will be retained. But by the time we get into, we're looking at forward-looking, after the second half, rates should begin to moderate. If we expect on a base effect, inflation rates should also moderate. So which would also be a major booster for the CBN or the MPC to cut rates. Secondly, it's also unsustainable for the government to continue to borrow or take money at this rate. So once they see that the FX is stable, because it's one of the major factors, FX is stable, and we're also able to meet their obligations, then I think that we'll begin to wind down rates. But in the global space, the US Fed chairman mentioned last year that they may also slow down given what happened around the inflation rate in December.
Right. All right. So much to look out for in 2025. Rates, inflation, currency. We'll see how it all plays out. Thank you so much, Dr. Ayodeji. It was MD Optimus by AfriInvest. Thank you so much.
Always my pleasure. Thank you.
All right. We'll give you a summary of what's playing out in the markets. That's at 1 p.m. on Business Incorporated. Thank you for watching. That's it from me on Business Morning. I hand things over to the Sunrise Daily team.